Hello everyone, welcome to the market opening bell on Wednesday, December 17th, your 10-minute guide to the stock market. The market is awaiting the US non-farm payroll data, with Asia Pacific stocks generally declining. Hong Kong stocks are down, with the Hang Seng Index opening 80 points lower before the drop widened significantly. In the afternoon, it fell as much as 542 points to a low of 25,086, closing down 393 points or 1.5% at 25,235 for the day. The X-share index dropped 159 points or 1.8% to 8,757, while the Hang Seng Tech Index fell 95 points or 1.7% to 5,402. The total turnover for the market was 201.5 billion Hong Kong dollars. Southbound funds net bought 82.02 million Hong Kong dollars worth of Hong Kong stocks, including net purchase of Xiaomi at 633 million, Xpeng Motors at 345 million, Tencent at 197 million, and Meituan at 177 million. Net sales included Alibaba at 631 million, China Mobile at 460 million, SMIC at 459 million, CNOOC at 332 million, PetroChina at 330 million, Ping An Insurance at 245 million, China Life at 123 million, and Yangtze Optical Fiber and Cable at 102 million. According to statistics, Southbound funds have net bought Xiaomi for 13 consecutive days, totaling $12.783 billion. Net bought Meituan for 5 consecutive days, totaling $4.807 billion. Net sold SMIC for 6 consecutive days, totaling $2.445 billion. And net sold CNOOC for 4 consecutive days, totaling $1.733 billion. Reports indicate that the food delivery subsidy war between Meituan and Taobao flash purchase has died down in the fourth quarter, with new changes on the delivery capacity side. From multiple informed sources, it was learned that since autumn and winter, both platforms have not only reduced subsidies on the user end, but also significantly cut back on rider subsidies. From mid to late September to November, riders from Taobao flash purchase flow back to Meituan in many places across the country, while during the most intense months of the food delivery war in July and August, Meituan riders largely shifted to Taobao flash purchase. Returning to the broader market, technically the Hang Seng Index once broke below the October 17 low of 25,145, reaching a new low since September 4th. If 25,145 is confirmed lost, the next support level is at 24,800. The tech index fell below the 250-day moving average at 5,430, hitting a low of 5,348, breaking November 21st low of 5,361, with the next support at 5,130. The 3 major A-share indexes opened low and closed lower. The Shanghai Composite Index fell 43 points or 1.1% to 3,824. The Shenzhen Component Index dropped 197 points or 1.5% to 12,914. The Chinex Index fell 66 points or 2.1% to 3,071, with combined turnover in Shanghai and Shenzhen at 17,242 billion yuan. The renminbi central parity rate against the US dollar was raised by 54 points to 7.0602 per dollar, hitting a more than 14 months high. The US dollar index continued to weaken, with both onshore and offshore renminbi against the dollar strengthening again. The offshore renminbi against the dollar broke through 7.04 again, rising to 7.03724 intraday, a new high since October 2024, with a cumulative year-to-date appreciation of 4%. The onshore renminbi against the dollar rose to a high of 7.0413 intraday, also a new high since October 2024, with a year-to-date gain of 3.5%. The recent continuous rise in the renminbi against the dollar has 2 direct reasons. First, around the Federal Reserve's interest rate cut. the dollar index continued to decline, falling below 100, driving a general appreciation process for non-US currencies, including the renminbi. Second, as year-end approaches, corporate foreign exchange settlement demand increases, boosting seasonal renminbi strength, especially after the recent sustained renminbi appreciation, which may accelerate the release of accumulated settlement demand. 7 is an important psychological threshold in the market, and the recent sustained renminbi appreciation approaching 7 has sparked discussions on whether the exchange rate will break through 7. Considering the seasonal effect of year-end settlements, the probability of a temporary breakthrough of 7% cannot be ruled out, but the central bank's stable exchange rate policy will strive to prevent one-sided consistent appreciation or depreciation. Following the joint release by 3 departments of the Notice on Strengthening Coordination between Commerce and Finance to boost consumption with greater efforts, the party group of the National Development and Reform Commission published an article in Qiu Shi magazine titled Firmly Implementing the Strategy of Expanding Domestic Demand, stating that firmly implementing the strategy of expanding domestic demand, adhering to domestic demand as the main driver, and building a strong domestic market will provide strong support for advancing Chinese-style modernization with high-quality development. Improved mechanisms to promote consumption, push for the removal of unreasonable restrictive measures on consumption such as automobiles and housing, and establish sound management methods adapted to new consumption formats, models, and scenarios, made good use of new policy-based financial instrument, infrastructure, real estate investment trust, inclusive loans and other roles, optimize mechanisms like investment subsidies and loan interest discounts to stimulate investment vitality. At the same time, deeply address involution-style competition, advance capacity governance in key industries, and implement policies and measures to resolve structural contradictions in key industries and promote quality upgrades. Govern low-price disorderly competition by enterprises in accordance with laws and regulations, unify market supervision and enforcement, strengthen anti-monopoly and anti-unfair competition enforcement and judiciary, forming a market order of quality over price and benign competition. In addition, promote the application of artificial intelligence across the entire consumer goods industry, fields and processes, expand consumption in the automotive aftermarket such as vehicle modifications and RV camping, develop interest-based consumption products like pet peripherals, anime, and trendy clothing and toys. At the same time, promote quality enhancement and expansion of service consumption with relaxing access and formal integration as the focus, expand service consumption, vigorously develop the silver economy, and promote the development of the smart health and elderly care industry. For 3 major Chinese airline stocks, all rose against the market. Looking ahead to 2026, civil aviation domestic market capacity growth will slow. Demand will continue a mild recovery trend, pushing load factors to new highs and ticket prices to trend upward. The international market will benefit from visa-free policies and the continued release of benefits from enterprises going overseas, with optimistic demand growth potentially stronger than expected, thereby driving sustained positive performance in volume and price. Today's newly listed stock, Hashkey Holdings, stock code 3887, closed at $6.68 in the Phillip Mart Grey market yesterday, flat compared to the listing price. Based on 2024 trading volume, Hashkey is Asia's largest regional onshore platform. Beyond trading, it's Asia's largest on-chain service provider by staked assets and the largest digital asset management institution by assets under management. As of September 30, the platform supports 80 digital asset tokens covering multiple categories, including major Layer 1 assets, decentralized finance tokens, stablecoins, and emerging ecosystem projects. The market is digesting U.S. economic data, including November non-farm payrolls better than expected, though October retail sales missed expectations. U.S. stocks were mixed, with the VIX Fear Index down 0.02 points or 0.1% to 16.48. The Dow opened low and closed lower, down 302 points or 0.6% at 48,114. The S&P 500 fell 16 points or 0.2% to 6,800, marking 3 consecutive trading days of declines, with the Dow boosted by Tesla. The Nasdaq rose 54 points or 0.2% to 23,111. The Nasdaq Golden Dragon China Index, reflecting Chinese concept stocks, fell 25 points or 0.3% to 7,556. Tesla continued its upward momentum, rising another 3.1% to close at $489.88, a new closing high. Its robo-taxi is being tested in Austin. Additionally, reports indicate Tesla plans to start battery production as early as 2027 at its electric vehicle factory outside Berlin. The factory plans to produce up to 8 gigawatt-hours of batteries annually, with capacity to meet the needs of up to 130,000 electric vehicles per year. The company will invest hundreds of millions of euros in the plant to fully operationalize its existing infrastructure. AI stocks also rose, with Nvidia up 0.8%, Oracle rebounding 2%, and Broadcom up 0.4%. Apple rose 0.2%. Reports say Apple plans to significantly expand its iPhone lineup, launching at least 7 models in the fall of 2027 compared to the current 5. This expansion will bring the most significant design changes to the iPhone in recent years, with Apple planning to release a 20th anniversary edition iPhone featuring a curved design on both front and back. Pfizer fell 3.4%. The company stated that expected sales declines for its COVID-19 products, along with the impact of some drugs losing exclusivity, mean adjusted earnings per share next year will be between $2.8 and $3, below the market's expected $3.05. The company forecasts next year's revenue at $59.5 to $62.5 billion, below the previous average expectation of $61.59 billion, with COVID-19 related product revenue expected to drop by about $1.5 billion from this year. The company also noted that due to some products losing exclusivity in 2026, revenue will decrease by about $1.5 billion, but it maintains its full-year adjusted profit guidance. U.S. November non-farm payrolls added 64,000 jobs, exceeding the market expectation of 50,000, while October saw a decrease of 105,000. The November unemployment rate was 4.6%, above the expected 4.4%, marking the highest since September 2021. The number of unemployed was 7.8 million, little change from September, while employment levels remained largely stable. The labor force participation rate was 62.5%, reflecting basic labor force stability. Average hourly earnings for U.S. private non-farm pay employees rose by 5 cents or 0.1% from the previous month to $36.86, below the expected 0.3%. Year-over-year, November's average hourly earnings growth was 3.5%. U.S. October retail sales were flat from September, below the expected 0.1% growth. Year-over-year, October retail sales grew 3.5%. Brent crude oil prices fell as much as 1.5% during Tuesday's Asian afternoon session to $59.68 per barrel, dipping below $60 for the first time since May. New York January crude briefly fell below $55, the lowest since February 3, 2021, due to oversupply compounded by potential Russia-Ukraine ceasefire. reducing export restrictions on Russian oil, adding more pressure to an already oversupplied market. Oversupply is fair to continue next year. Our stock pick today is Goldwind Technology, stock code 2208. Goldwind Technology is one of the earliest domestic wind power companies to expand overseas, has always adhered to the principle of promoting internationalization through localization. Through continuous innovation and international layout, it drives global energy transformation and sustainable development. The group has established a 1+1+6 R&D layout globally, along with 7 major regional centers, 5 global solution factories, and 3 international production bases. Its overseas business has successfully expanded into markets in North America, Oceania, Europe, Asia, South America, and Africa, possessing comprehensive capabilities to provide stable and reliable renewable energy solutions worldwide. As of now, the group's business spans 6 continents and 47 countries globally, with installed capacity exceeding 2 gigawatts in Asia, excluding China, and South America, and exceeding 1 gigawatt in North America, Africa, and Oceania. Data released by the National Energy Administration shows that in the first half of 2025, the national new grid connected wind power installed capacity was 51.39 million kilowatts, a year-on-year increase of 98.9%, of which onshore wind power new installed capacity was 48.9 million kilowatts, and offshore wind power new installed capacity was 2.49 million kilowatts. As of the end of June 2025, the national cumulative wind power installed capacity was 573 million kilowatts, an increase of 22.7%, accounting for 15.7% of the grid's power generation installed capacity, of which onshore wind power was 528 million kilowatts and offshore wind power was 44.2 million kilowatts. The cumulative installed capacity of wind power and photovoltaics has already exceeded the installed capacity of thermal power. The 2026 National Energy Work Conference was held in Beijing on December 15, mentioning the need to solidly promote the green and low-carbon transformation of energy, continuously increase the proportion of new energy supply, and add more than 200 million kilowatts of wind power and solar power installed capacity throughout the year. From January to September 2025, the group achieved external sales capacity of 18,449.7 megawatt, a year-on-year increase of 90.01%. Among them, units below 4 megawatt had a sales capacity of 22.5 megawatt, accounting for 0.12%. 4 megawatt to 6 megawatt units had a sales capacity of 2,550.05 megawatt, accounting for 13.82%. 6 megawatt and above units had a sales capacity of 15,877.15 megawatt, accounting for 86.06%. As of September 30, 2025, the group's external pending orders total 38,861.14 megawatt, broken down as below 4 megawatt units 605.12 megawatt, 4 megawatt to 6 megawatt units at 6,596.23 megawatt, 6 megawatt and above units 31,659.79 megawatt. The group's external won but unsigned orders were 11,012.73 megawatt, including 4 megawatt to 6 megawatt units 1,119.8 megawatt, 6 megawatt and above units 9,892.93 megawatt. The group's in-hand external orders total 49,873.87 megawatt, of which overseas orders were 7,161.72 megawatt. In addition, the group has internal orders of 2,586.97 megawatt, with total in-hand orders of 52,460.84 megawatt, an increase of 18.48%. In addition to actively building a product layout covering onshore large bases, offshore deep sea areas, distributed wind power, and other scenarios, the group is also synchronously expanding new businesses such as wind power plus hydrogen production, energy storage, hybrid towers, energy carbon, etc., continuously broadening wind power application scenarios. Suggested buy price $13, target $14.4, stop loss $12.4. I do not hold the above stock.